distinguished panelists are going to be discussing about investing in the Bharat opportunity. Let's begin by welcoming our moderator, Amit Nauka, Partner Deals PwC. Amit is a partner at PwC, specializing in technology sector deals. With over 2 decades of experience, he has offered strategic guidance on more than 400 fundraise and M&A transactions spanning SaaS, fintech, consumer tech, and associated sectors. Let's put our hands together and welcome Amit Nauka to the stage, ladies and gentlemen. Thank you, sir, for joining us today. Let's keep that applause going for our panelists for this panel. Anshul Jain, Managing Director, Lighthouse Funds. Anshul is a Managing Director and co-leads the investment team at Lighthouse Funds. She serves on the board of Duroflex and previously led consumer sector coverage at ICICI Securities in the investment banking team. A round of applause, please, for Anshul Jain. Our third panelist is Ashley Menezes, COO and partner, Chris Capital Advisors LLP. Ashley's been with Chris Capital for 24 years, and he is a member of the advisory committee. He's responsible for diligence, regulatory industry relationships, legal, compliance, and operations. Mr. Menezes is a private equity veteran and has served on the board of the Indian Private Equity Association for almost 8 years and is the current vice chairman. He's also served as a member of the CII National Committee of Private Equity and other industry bodies. Let's give Mr. Ashley Menezes a round of applause, please. Let's welcome back to the stage Nithya Iswaran, Managing Director, Multiples Alternate Asset Management. Nithya has over 25 years of rich experience in financial services and leads the financial services and fintech investing practice at Multiples, a private equity platform with AUM of over $2 billion US. She's a director on the board of Multiples and a part of the investment committee, and developed Multiples' proprietary framework, Leadership Energy Level, to analyze DNA of entrepreneurs. A round of applause, please, for ma'am as she's taken the stage. And last but not the least, we have Sakshi Chopra. I beg your pardon. Our second last panelist is Sakshi Chopra, Managing Director, Peak XV. Sakshi focuses on growth stage companies and has advised on investments across a range of consumer and fintech companies. She began her career with Deutsche Bank, where she worked in the executive office of the global head of private and business clients in Germany, and later in the global transaction banking business here in India. A round of applause for Sakshi Chopra, ladies and gentlemen. And last but not the least, we have Vishal Tulsian, Managing Director and CEO, Motilal Oswal Alternates. Vishal founded MO Alternates, the erstwhile Motilal Oswal Private Equity, in 2006, with MOFSL being the sponsor. At MO Alternatives, Vishal looks to build a platform to channelize long-term capital to create valuable enterprises and successful entrepreneurs. He has spent 2 decades in the Indian financial sector across private equity, investment banking, and structured finance. A welcoming round of applause, please, for Vishal. So over to you.
You know, the narrative that revolves around unlocking the vast potential of Bharat, of investing into Bharat. As investors, entrepreneurs, and thought leaders, it's crucial for us to understand the nuances of investing into Bharat, its unique challenges, its diverse market dynamics, and more importantly, the transformative impact it can have on business outcomes as well as societal change. Over the next 30 minutes or so, our esteemed panelists will share their insights, experiences, and strategies to tap into the Bharat opportunity. So I'll start off my first question with Vishal. How do we size up the Bharat opportunity? And why should it be a focused investment thesis today?
Yeah, thank you very much. At least on this panel, we've maintained a perfect diversity. You know, when we started this business 18 years ago, we realized that while we'll continue to see opportunities from the key 7-8 cities of India, but we also realized that there is massive amount of entrepreneurial talent in tier 2 and tier 3 cities. And we said that if we have to do any justice to the private equity business, we need to really go out and look for companies and businesses out of tier 2, tier 3 cities as well. And over the last 17, 18 years, close to half of the transaction we've done are companies that have emanated from these places. So clearly, as far as India's growth story is concerned, over the last 25 years, we moved from $0.4 trillion economy to roughly $3.75 trillion economy. And, but we are still 3% of world GDP, while we've continued to grow at 9% in dollar terms. As we think about the next 25 years of our journey, which we also call as the Amrit Kal, and I think if we can grow at 9 to 10%, thanks to the software exports, domestic consumption, and the manufacturing side, I think we'll probably hit $35 trillion in terms of size of the economy, and we'll be third largest economy by far, and the difference between third and fourth is going to be very massive. In terms of per capita, we are still less than 20% of world's average per capita. But I think in the next 25 years, we'll hit a per capita of close to $19,000 to $20,000, whereas world will be between 25 to 26,000. So the gap that we are talking about that exists today will clearly come down, and that's when we think the growth opportunity is going to be very massive as far as India's consumption is concerned. Many of the companies, for example, one of the companies that we invested in very recently from our fourth fund, and we could have never imagined that we could have the largest domestic Indian diaper manufacturing company coming out of a city like Rajkot. As you know, the entire baby diaper as a space is controlled by MNCs. 90% of the market is still controlled by them. And there's this company out of Rajkot which said that we are going to probably sell diapers made in Bharat and sell it in Bharat. So they identified an opportunity to sell diapers in tier 2, tier 3 and rural belts. And today, over the last 5-6 years, it's a company which started just 6 years ago, is going to touch roughly 800 crores of revenue today, and is by far the largest domestic diaper manufacturing company. And we think over the next 8-10 years, there is a room for an Indian company coming out of a tier 2, tier 3 space, giving a massive amount of competition to global MNCs like that of P&G, and hopefully could emerge as the top 3 diaper manufacturing company in this country. So I think there are many such opportunities which exist in India, and we see massive amount of entrepreneurial talent in many of these smaller towns and cities as well, and that coupled with the the compounding effect of India's growth over the next 20-25 years. At least we've never been, this level of excitement we've never seen before in the last 25 years that, at least I started my, professional journey.
I'll just take a follow-up question. I've seen quite a few investments made by you in Bharat. What is one learning that, how is Bharat investments different from, say, an urban company investment? Is there something that you want to highlight?
They treat you better. They feed you well. But there's a massive amount of, thanks to internet, and India getting more and more knowledge in terms of what's happening globally. At least 15, 16 years ago, we did not see that much of knowledge or that much of maturity as far as Indian entrepreneurs are concerned. But over the last 15 years, I think every mid-sized company would know what a private equity is all about, would know how they need to build their company to not just raise capital from venture capital or PE and eventually get public at some point in time. So I think honestly, one big challenge that we see because of the cities that they are in is hiring of talent. I think that's a big challenge that we have seen from our experience of. So for example, we have a very exciting tiles company coming out of Morbi, but hiring talent there is where we've seen a lot of challenge. But many of these companies over the years, we've seen also being very flexible about keeping some of their key talent in cities where they can get such talent. So I think hiring of talent is one key challenge that we've seen.
No, thanks for that. Ashley, if I can ask you the same question, about sizing up the opportunity, any additional perspectives you would like to share?
Thanks again. It's a privilege to be part of this panel. So, I mean, Vishal's touched upon many of the main points. I think the biggest thing is we are a country which is, whatever, 1.4 billion, right? So there's numbers to our credit. A large percentage of that sits outside the metros and tier ones, right? I think we had a situation 30, 40 years ago where everyone, if you want to find a good job, you want to make money, people were coming into the metros. I think you're seeing that, and I think partially, post-COVID, a lot of people went back, and are saying, can we do things there? So you're seeing a lot more entrepreneurship there. Again, in our 25 years, we've learned a lot. So in the first few years, we were completely focused on the 4, 5, 6 metros, right? And I think over time, we realized that there is a bigger opportunity out there. So to give you an example, one of our companies, Mankind Pharma, started on focusing on distributing drugs in the rural sector. Today, it's IPO'd, it's about $10 billion in market cap. And this is over a period of, call it 25 years, right? So you've seen that transformation. You've seen businesses start there. I think the opportunity is humongous. So one is on the consumption side, and the consumption is driven a lot by tech. Remember, India has jumped through many stages of evolution on the tech side, right? We moved from, we skipped the whole landline, pager sort of a thing, right? At that time, we straight went to mobiles. And that has given us the benefit of every single Indian has a mobile phone, and that makes a lot of things accessible. May not be buying things, but simple things like UPI, right? The ability to transact off your phone, sitting in the middle of anywhere, is just an amazing thing that a lot of countries don't even have that, right? So I think that is the advantage where India has been able to skip trends and move forward. And that is a huge enabler. Right? And so besides the consumption side, I think what we've also seen is even on the opportunity from a delivery side, we're seeing a huge trend there. So, a couple of companies on the IT services side, traditionally would set up their BPOs in places like Gurgaon or Bangalore. We're seeing them move out, right, to places like Mysore, places like Aurangabad. May not be completely tier 3, tier 4 cities, but are getting there. And you're seeing the ability to use local talent there, right? There are lots of very smart folks, very strong educational institutions outside the tier 1 markets. And can you use that talent? And with a little bit of training, I think it's a cost-effective solution for our companies. It's a diversification from focusing on, there's riots or a Bandh in Mumbai, the whole city gets down. We've seen that, or Chennai floods, right? I think the benefit of having, centers all across the country just enables that. So I think that, in our mind, it's a no-brainer, right? You cannot be focused on a small segment of people, but the real opportunity is out there with the masses out there.
Right. I think interesting insights. And see, like you spoke about connectivity, right, and having smartphone. Sakshi, if I may just ask you the follow-up question, is the opportunity for today, because we have been hearing about this access, but is there a market that can be tapped into? Like a Speak 15, you all invest into a lot of diverse sectors and probably slightly earlier in most cases. So how do you see this monetization and business being created in Bharat?
Hi, everyone. Thank you for having me here. I think if you trace back like 15, 20 years back, to be able to, the Bharat opportunity represented a low-cost opportunity. You had to innovate for that market. You had to have a low-cost product, and you also had to build a low-cost distribution. I think, and hence the responsibility of doing that solely did lie with the likes of public sector banks or companies like HUL, which have built the deepest distribution muscle in India. But what's really changed in the last decade is, a bunch of factors. Let's talk about it. First is, just the growing digitization. We have the tech stack today, which, so UPI is one of the biggest innovations for India today. We have increasing online penetration. Of course, it's happened in the last decade with the likes of, your Flipkart, Amazon coming in and driving online penetration very hard across categories. And largely, it's also the growing affluence for Indian consumers. So today, like, you have maybe 60 million affluent customers in India earning more than $10,000 per annum. And that number is expected to hit 100 million in the next 3 years. So now what that's going to do is drive a lot of consumption. So India is targeted by 2030 to be the third largest consumption economy globally. So I think these three factors, and of course just GDP per capita growing, I think what it's going to allow for is a lot more innovation and a lot more businesses building inclusive distribution, which basically then the opportunity set that they're targeting is not limited to metro cities. It's really reaching out to the next degree or next level of cities, the tier 2, tier 3 markets of India. Maybe let's talk about one or two examples. We have in our portfolio a company called Grow. It's a 4-year-old company. In under 4 years, they've got to the top 2 position. They're a brokerage company. So they're probably the second largest brokerage company today in India. And they have been able to crack a thing called eKYC. So to open a brokerage account 10 years back, you would have had to fill multiple paper forms, and it would take you a couple of days to get that going. Today, you can finish your KYC in under 60 seconds and have a brokerage account live and running, and you can start trading. We have companies, another portfolio company I'd love to talk about. Let's talk about Purple. It's a beauty distribution platform that is today covering almost 80 to 85% PIN codes in India. So, what's really changing is there's obviously wealth accumulation, there's wealth generation in the next set of markets. There are consumers who are willing to buy. But I think what these young new age companies are using technology is to just create more inclusive distribution and access for those customers. And hence today, easily most consumer companies in India will have at least 50 to 60% of their revenues being generated from these markets. Actually, like if we have another portfolio called Mamaearth, it went public a couple of quarters back. Almost I think 60% plus of Mamaearth's revenues today is from markets outside metro cities. So I think that's what's changing.
Right. You spoke about 2 sectors, and maybe we should dive into them slightly more. I think one you spoke about Grow, which is in financial services, and the other 2 examples were in consumer. So Nithya, if I can come to you on financial services, you have made a very recent investment also, that's focusing on Bharat. So how are you thinking about it from a financial services distribution standpoint?
And I'm very excited to be here. And I want to thank Vinpi and Amit because this whole India B, which is Bharat, has been the center plate offering for our financial services investing. Right? So we right from the latest investments we announced was in microfinance, the coming together of 2 very large franchises to build the second largest. We have played it through affordable housing finance. We set up a platform called Vastu. We have played it through MSME in 2 ways, a platform called APAC, and our investment in Veritas, and through vehicle finance in Kopta. So it's been, if you see the last 4 or 5 years, it's been multiple investments around this. And we continue to remain bullish. So why is that so? I mean, some numbers are quite staggering. I was just putting down in preparation for this panel. So if you see microfinance itself, it's 350,000 crore AUM industry now. If you look at affordable housing finance, that's a 10 lakh crore AUM industry now. If you look at MSME, that's 2 lakh crores. These numbers are large, and they have all been growing at 25% roughly if you take the last decade or so, despite COVID and everything that's happened in between. But I would still say there's still a lot of penetration to go. So if you take the AUM of all of these industries, 60% of this AUM is in about 5 or 6 states. So if you take Tamil Nadu, Karnataka, Maharashtra, Rajasthan, Gujarat, this is where 60% of this AUM, and we are a large country. So there is still a lot more to go. UP, Bihar, AP, Telangana are now opening up, and we will see a lot more happening in those, and we still haven't gone to Northeast and so many others. So this will continue to remain, a very exciting opportunity. What COVID has also shown is, one fear people would have had is credit quality coming in from lending to certain strata, and even for a shock as large as COVID, many of these asset classes behaved very well. And the secured asset classes we measure something as of March 20, what was your AUM and how much was the losses for that industry from there, right? Even for a microfinance industry, that would have been about 10 to 15%. For the well-run companies, lower than 10%. And for the secured asset classes, probably in the 5 to 10% range. So it's kind of shown that what we have seen is customers have multiple sources of income in the family. So they are able to take shocks well. And so this is a very bankable kind of a segment. If you look at and it will continue to absorb a lot of capital. If you just turn that around, Sakshi spoke about grow. If you look at mutual funds, and if you look at what they call as B15, the beyond 15 top cities, that has been a focus for the industry. And that AUM is now, I think, close to 17 lakh crores, which is about 35% of the total AUM in the country. And that's grown from 20 to 35%. So its growth rate is obviously very, very large. And India has one of the smallest SIP sizes, right? The SIP is now gone down. It's about 2,300 rupees is the average SIP size. And remember, this takes into account the very large SIPs as well. So it's gone down from 3,500 to 2,300 rupees. And we did hear the SEBI chief speak further about, a few days back on saying we need to take it down further. And I'd like to see 500 rupee SIP amounts kind of increasing. All of what, some of what all the panelists spoke about, the technology, allowing these small ticket sizes to go in has enabled this. We do see, some, challenges. If you see insurance penetration continues to remain very low. Health insurance will be less than 20%, life insurance will be less than 10%, and distribution has been a challenge. So hopefully some of the newer regulations on which IRDA has been pushing will help that, will help the distributors take it into these markets. We see a lot of attrition in all our financial services companies, one of the biggest challenges. It's actually gone up post-COVID. It used to be 15-20% on the front-end staff. It's gone up to 40% in almost all companies that we see. So when you look back and say, how do I deliver this credit at a good OPEX and generate a good ROE, that is a struggle which we'll have to deal with. Hopefully, a mix of technology will help us with that. We do see that this industry, if it has to grow large, needs to attract a lot of debt capital to kind of come in to support the financing. And we've been hearing Reserve Bank talk about a lot of diversification of liabilities. But where is the alternate debt markets other than banks currently? So that has to develop out. So a lot more on the bonds and all the alternate, and maybe DFIs investing more should help this sector. But as with most things, I'm sure we'll figure it out over the next decade. So I am very bullish about all of these three segments heading into the tier 2, tier 3, tier 4 industries, as we have seen a very massive change in the last decade.
Yeah. And, I think with the whole India stack, the financial services as a sector has possibly benefited the most, because if you look at Bharat, a lot of times the problem is of access. And, the India stack provides for presence-less and all of that. And you spoke about eKYC. I think all of that is built into it. So I think financial services, many opportunities in Bharat.
It's surprising. Most of our MSME companies have, APAC has 99% non-cash collections. So that whole zone of saying that, I need to go deploy my people, collect in cash, and that's how that... Yeah. And we'll see some of those changes happening in maybe microfinance and the other industries. So we are leading the way in some of these sectors, and everything that we've spoken about, saying the phone is there and you can pay is really helping in that. Yeah.
And the economics is rapidly changing with the technology. Anshul, if I may just come to you on consumer, I think there were 2 examples given here already, but there are so many more. So would you like to talk about that sector?
Absolutely. Thank you, WinPE, for having me here. Look, a lot of my co-panelists spoke about in terms of how GDP per capita increase is actually changing the game beyond just the metros. I'll just add nuances in terms of what we are seeing, some through our portfolio and some outside. Look, while it's a well-known fact that we are the largest data consuming country, and beyond just ability of brands to access and talk to the consumers who are sitting there, I think it's also changing the game in a big way in terms of learning that people are able to access in those cities, and hence taking really their capabilities up, right, to be able to add value. Work from home has gotten enabled, and that has really brought about the whole affordability. The other things that's happening is, the government push on infrastructure. While, of course, the connectivity gets better, look at how it changes the game for the cities that are nearby. The reach becomes a lot more faster, and it has brought the upliftment in those regions. For consumer directly, I think, you are able to reach, any brand is actually able to reach any consumer today. It's gotten democratized, less than $150, right? You are in 19,000 pin codes in the country. And that has given power in the hands of consumer to actually choose from the brands they like. Now that's the online part. Of course, with the affordability, I think brands have also, the offline ones are also choosing to reach out to a lot more deeper places, right? I mean, you talk about premium coffee like Starbucks, it's reaching to 49 cities today. So, so I think in consumer, you are seeing these nuances where, awareness, access is actually sort of fueling them to fulfill the aspirations. In our portfolio, actually, we've always been a fund who have focused on Bharat. 10 years back, we backed a company in Bikaner called Bikaji Foods. It's the second largest ethnic snack brand in the country. So that is one example. Another one is Duroflex mattress. It's based in Bangalore, but actually servicing the tier 2, tier 3 customers in the southern region. So, that has been really the focus from fund side also, and we have seen a lot more growth coming by in those regions.
Right. In the consumer sector, when you look at the unit economics, a lot of times, you need to worry about, say, cost of customer acquisition. And Bharat is very different from, say, the urban cities. So any examples as to how some of the companies that focus on Bharat in the consumer sector have looked at customer acquisition in a more differentiated way?
So look, I will break this into two parts. We had made an investment in Nykaa, for which 60% of demand was coming from tier 2, tier 3 cities, right? Given their model, given they were a digital first platform, they were able to solve for the economics in a lot more profitable way. The companies which have started with offline channel first and moved on to digital channel, they are yet finding their balance. So it's a question that gets discussed in every meeting that we do, that how do you balance out the economics? Offline channels tend to be a lot more profitable, but in online, just given the cost of consumer acquisition, it's something which gets settled over a period of time. Each company is doing things differently in terms of how to solve for this. But look, you can't leave out that consumer, that is consumer of tomorrow, and you have to expand the reach to get in those cities, right? So you are absolutely right. It's not something which has gotten solved for across. It's getting better, right? So what do brands have to focus on? They have to focus on, is the product good enough to get you repeats? So what we have seen is as the companies get repeat purchases, the economics gets a lot better. Secondly, are you able to not sit on the laurels of your product and continue to innovate what the customers need? So if you are a pan-India brand, the customers' demands in South India could be very different from North India, right? So are you able to make those nuanced differences and innovate as needed by the consumer? Again, economics get better if you keep refreshing the offering, and these could be very small things. I'm not talking about some big tech-led differentiation, etc. So that is the second aspect. And third, we have seen is just just ability to leverage technology in terms of your back end, right? Whether it's supply chain, you delivering more effectively. Are you able to use technology to see what demands are coming by? If you do that effectively, then economics over a period of time has gotten better.
Yeah. And in my experience, the companies in the consumer sector which are winning in Bharat have also used some of the newer aspects of influencers because they come in a more cost-effective way rather than digital marketing. So many innovations happening there. If I can move to the next question, maybe I'll start with Ashley. We are talking about the Bharat opportunity. As investors, do you look at companies that focus in Bharat, or there are companies in the urban areas that look to expand into the Bharat market and get that as a consumer segment?
So the answer is it's a combination of both. I think it's not a given that if you are in a particular region or a particular sector to be able to expand. I think the key thing that we look for in entrepreneurs is what are their capabilities? And our advice to them is you should expand, you need to grow, but get into adjacencies as opposed to, so if you're sitting in Chandigarh to think that you can service or do the same thing in Trivandrum is a bold step, right? I won't say it can't be done. But to give you an example, we were in a company called AU, which was, Vishal was there before us, right? Focused on a certain market in Rajasthan, right? Now, as they grew and as they spread, they moved into geographies around there. So it's Gujarat, Maharashtra, etc. So I think it, again, depends on the specific sector. If you're on the consumer sector, maybe it's easier where you're using a lot more technology. We talked about Purple, Nykaa, etc., where you can reach a lot more pin codes, through the same channels. You have to have a different mindset. So if the entrepreneur is a classic urban MNC type of person, will they have the capabilities to roll out products in, understand the consumer in different sectors? So those are challenges. So to answer to your question is, it's a nuanced thing. I think we think that it's better to generally back an entrepreneur who's already done it in a particular market versus if the objective is you're in A, but you want to grow into a B market. I think that is a little harder to do. But if you've been able to demonstrate it, where you've been able to grow and showcase yourselves in a certain region, to be able to expand beyond that, in our experience, has been a little bit more easier, achievable, versus the other way around.
Anybody else has anything to share about this particular topic?
We are in the business of making money for our investors, right? So wherever we think we can find great businesses that we have competency to understand, and as a white space available in terms of growth, is where we look to invest in. The reason why we are talking about this whole Bharat opportunity is simply driven by simply driven by consumption, and that's driven by growth in per capita. Today, we as a country are at $2,500 per capita, and 60-65% or maybe more goes for just non-discretionary expenditure. But as we grow, and that is what many companies hope to tap over the next 10-15 years, as the per capita moves from 2.5 to 5 to 8 to 10, you will have a much larger portion of that money available for your discretionary expenditure. And please appreciate a large part of India, which is 65-70% of the population that we are talking about, are living in these tier 2, tier 3 and rural areas. And that's why we think there's going to be massive consumption. But at this particular point in time where we stand, this also comes with some bit of a threat. For example, in the last 12 months, the consumption on the Bharat side, Anshul, you know it, has not been that great because of the monsoon being there, because of the inflation being high. So at least for some of our companies where the target audience is that particular segment, we've seen a slowdown right now. But we are very sure that over the next 3-5 years, as the income keeps on rising, you'll see more and more demand coming from them.
Sakshi, if I can just turn this over to you. What will it take to win in this space? Is there something that investors need to think and do differently?
So first, at least, I'd like to say that from my point of view, I think Bharat is a mainstream opportunity. It's not this niche, hard to capture kind of opportunity. It's becoming most mainstream for all businesses across industries. But having said that, I think the consuming class is very new to many categories that they're purchasing, and hence businesses will have to be built a bit differently. The mindset will have to shift. So maybe just to name a few things top of mind, I think your marketing would have to be more vernacular, and a lot of companies are doing that. English, Hindi is not mainstream for those markets. So to be able to acquire customers more effectively, you have to speak their language, and hence companies are tailoring marketing to be more vernacular in nature. I think also just using technology more aptly in terms of building distribution. Distribution will be a function of online and offline. I think it's hard to believe that online alone will be able to serve this market. But as you build offline distribution, you have to be very mindful in terms of how quickly you scale. Cost structures have to be different. And lastly, I think a lot of these consumers are very new to the category, and hence the degree of customer service and customer orientation will have to be quite different. So I think whether it's consumer or financial services, I think this is some of the muscle a lot of the companies and founders will have to build to be able to serve this customer more effectively.
If I can just add to that, just from a financial services, very, 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 very good points, and just what we look for is to say, just having the degree of being more responsible, because you are selling financial products to this customer. It is a little bit more vulnerable segment. We look for empathy, a lot of empathy in our founders. The regulations pull you the other way. NPA norms are once an NPA, always an NPA. What has that done to most of our lending companies, right? You've tried to get your collections in 60 days instead of the earlier 90 days. That is a pressure on your consumers who may have volatility in their income. These are honest guys who really want to pay you back, but they are living through that cycle. And so, hence, there is a pressure going in to your collection teams to say, reduce your NPA and bring it back early. But still having that balance of saying, being responsible, more fair disclosure, and having that empathy is what we look for, especially in financial services to the tier 2, tier 3 markets.
Very valuable. To open it up for the audience, in case anyone, I think there's a question there.
Yeah, I think, irrespective of stage, whether we come in and we're a full stack firm, so we do seed, we do venture, and we do growth as well. I would say across all stages, we believe you make money in our business when three things converge. First is great market, so that, in your mind, that's what you're alluding to as product. Second is a great founder. And the third is obviously at the right price. Now, having said that, I think Mr. Market or Mrs. Market always wins. A great founder seldom can fight a poor quality neighborhood. So I think market always trumps. And then, of course, great execution by the great founder. And hopefully that's a good formula to make money. It's not so scientific, but I think if you have a good category, good neighborhood, sometimes, look, founders are great from the 0 to 1 journey. Sometimes they're not that great for the 1 to 100 journey. But because India talent density is so high, you can actually hire the right people to keep executing well. So I think Mr. Market or Mrs. Market wins.
Add to that, if that's all right. I think, obviously, Miss Market is extremely important, but I think the other thing, just from a entrepreneur perspective, I think what we look for in management is not in terms of how they'll fare in good times. I think in good times, everyone's great. But I think is the capability of the person, both from a business perspective as well as from a governance perspective, aligned with you when times are not the best, right? So I think the best entrepreneurs are the ones who faced resilient times and have been able to stand up, move on. And so she and he are able to do that, have demonstrated that, and I think that's the biggest mark, because things will go wrong, right? We have long decks. about how everything's going to grow, and 80% of it does not happen, right? The model that you build out, it does not really play through. So you need someone who's able to adapt, able to to read the situation on the ground and drive growth in a particular manner. So it would be a combination. I think those two, to your point, 40-60, 50-50. I think they're must-haves in both. Yeah.
Oh, I think it's a combination of both. Like I can give you again one or two examples from our own portfolio. Grow is founded by a consumer internet founder. One would have, 5 years back thought it's an incredibly incorrect choice. How can someone with a consumer internet and a product background actually build India's largest brokerage company, or not only brokerage, India's largest or soon to become financial services company. But look, someone who came from outside was able to think a little differently and disrupt a otherwise very, very staid industry. And of course, along the way, you need very, very experienced people in your team to keep building with you and help you execute some of the more solved problems better. Having said that, look, another example, Mama Earth, you have Varun, who comes from the FMCG industry. He's worked with HUL, he's worked with Coke. So, I think both combinations work. What you really have to do is, find that needle in the haystack, that one person who has the vision and also some execution capability and thinking, basically. Yeah.
Okay, I think with that, we got to bring it to a close. Thank you all for the very insightful session. I really enjoyed it. Over to you. Thank you.
Ladies and gentlemen, let's give a huge round of applause to our panelists. And please do stay back on stage because Wimpy would like to present you all with a token of our appreciation. I would like to invite Wendy Werner, Country Manager, IFC India, to please do the honors. So our giveaways for today are products that have been made by women entrepreneurs, and Wimpy is really proud to be able to give them this platform to showcase their products. Thank you, Mr. Anoka. Thank you. A big thank you to you for moderating this panel. Thank you, Ms. Sakshi Chopra, Anshul Jain, Mr. Ashley Menezes. Thank you, Ms. Nithya Iswaran, and of course, Mr. Vishal Tulsian. Thank you so much. Ladies and gentlemen, we'd like to get a group photograph of our panelists, so if we could have you all together for just a moment. One more round of applause, please, ladies and gentlemen. Thank you so much. And thank you, Ms. Werner, for doing the honors.